Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday on Tuesday. I was at jury duty yesterday, did not get selected. So we are back on track for the rest of the week. Looking at the flows report from James at CoinShares, still negative on the week. And if we look at the breakdown, negative across the board on the US side, negative across the board for the most part on BTC, non-BTC, non-US, US. Very little action in general going on, as I think the markets are still in volatility shock. Looking at the cumulative 30-day flows, we're trying to flip back positive. Trying. We'll see. A lot of this is going to happen all at the same time. Bit of a chicken or the egg problem. What's going to be the catalyst to actually push us back into the 90s if we see it? Are we going to need another couple weeks just to flatten out, to absorb the volatility and the negative headlines and maybe get some positive headlines? So far, we haven't really seen too much evidence of screaming positivity across the board to help push us higher. If we look at the basis here, basis is slowly curling up. So we may see some flows on that, but really not much to speak of here on the ETFs just yet. I think gold is still stealing a lot of the thunder from BTC. We need gold to settle down first, and that will give BTC some room to run. So if you're turbo bullish gold, generally BTC and gold don't move together. And it's hard to be bullish on both at the same time. I think fundamentally, many people are bullish on gold and BTC for the same reasons, but mechanically how that works in price, typically they don't move at the same time. Looking at the BTC cloud here on the daily, again, not really too much to say, just waiting. This could be some sort of nightmarish inverted head and shoulders, could be an eventual U bottom. We're certainly not in bull territory yet. That would be 93 plus. There's probably going to be an opportunity for a lower risk reward edge to edge trade eventually, maybe into May as things clear up in the news. But sitting here, really not too much to say or do. Just waiting for legacy volatility to calm down. On the 8-hour downtrend with the cloud, we may see something later on in the week. It's also no trading on Friday for legacy. It's a holiday week, so we may not see anything until next Monday. We also have tax day today in the US here, obviously. So there's probably a few reasons why volume across the board has been rather light. But if we can start to make some headway here, then we've got some evidence to say, yes, okay, we're finally out of this downtrend that started in January, and maybe this can materialize into something. On the legacy side, IBIT, not as bearish as spot looks. It's still in the cloud there on the daily. Spot will drive this, obviously. But again, it's a chicken and the egg. Where's the volume coming from? If there's no volume on the weekend and it's all legacy volume in the US during the day, then this might be all that matters. Maybe Bitcoin futures is all that matters. But I would love to see anything reclaim bullish territory first, whether it's this or spot or futures or MSTR. MSTR is starting to get into the daily cloud. We'll take a look at that. This is leveraged BTC, still very much in bear territory. On the daily, really nothing to do here whatsoever. If you're taking trades down here, you're hoping for some low time frame diagonal to break to the upside, but there's just nothing here. Ultimately, unless it's above the daily cloud, it is going to have a hard time with bullish continuation. So this is just a time thing. This may take us, at least on BITU, into Q4 at this point. MSTR, which is also leveraged BTC, looking definitely much better than the leveraged ETFs. In the cloud here, you almost have a bullish TK cross. You probably get a bullish TK cross today, tomorrow, Friday, as long as price doesn't collapse entirely. And then we can talk about an edge to edge here. We can talk about a W, a bigger W, another W, whatever, right? As long as there's some more supporting evidence for a firm bottom than bearish continuation, it may all individually be flimsy, but collectively, to me at least, we're getting there, right? We had the falling wedge fake out breakout. We had the channel fake out breakout. Now we're getting in the cloud. We may get above the pitchfork. Ultimately in May, we will probably be in a better spot. But it's definitely super early to say that meat is back on the menu for the MSTR people. And the miners, just forget it. I mean, these are completely in deep bearish territory. I saw yesterday Bitcoin difficulty hit a new all-time high, and that just means miners are getting paid less. I don't believe transaction fees are rising or high or at a place where the miners are getting appropriately paid for spending all this money with hash rate. So at least from the publicly traded miner perspective, still bearish. And the good news here is it's so bearish, it's similar to 2022, where it just got so bearish that once it flipped, it was obvious. But I wouldn't want to sit and hold these. I wouldn't want to hope that this is going to turn around. Yeah, it's a little oversold. Yeah, it might bounce, but definitely not in bullish territory down here. And this is ETH A. This is BlackRock's ETH ETF, also very much in deep, deep bear territory. You could probably do ETH A divided by WGMI to see which is worse, but both of these just look abysmal. Very bearish. Trying to bottom, maybe. Trying to hold the oversold stance and bounce with the div, maybe. But it's at this point, you're kind of just guessing. Would love to see this get a little bit of an inverted head and shoulders. Neckline at around 15. Then we can start talking about something you can get your hands around. But down here, I just don't see anything. It's the same with WGMI. Just what is down here? I don't know. I got nothing for you. ETH-U, leveraged ETH, also just there's nothing to do down here. There just really isn't. Let it die. Hope for a better entry in a week or a month or Q4. And you just wait. You just do something else. Broadly, there's really not much to do here across the board on legacy or in crypto. I had bought Sol last week and it kind of floated around 130. Didn't really go anywhere. I saw this morning. Really don't like this low time frame head and shoulder stuff, so I dipped out of my Sol position for now, but doesn't mean I won't keep trying later. It's just to hold anything with a chart that looks like this. Yeah, it's on the hourly. You know, it's not screaming bearishness on high time frames, but not bullish. Not bullish here on low time frames for Sol. For the legacy calendar this week and next, really not too much, at least that I care about. I mean, some of this stuff is going to get headlines depending on how bearish or bullish it looks, but to me, nothing here really matters. It's all about jobs and inflation, even next week. Consumer sentiment, maybe. You know, I don't really know anything that's going to move the needle here necessarily in the economic data. Some of these surveys from the manufacturers are coming back with a turbo bearish outlook, as you'd expect, because the tariff stuff is not bullish for manufacturers. They're having a hard time figuring out what to even do in the environment. We do have a Fed meeting less than a month from now. We are pricing in no cut next meeting, then 4 cuts after that into the end of the year. No cuts in 2026. We'll see how many of those cuts we get this year or next or at all. But on trueflation, which we'll get to in a second here, we're sub 2%, have been for quite some time. CPI is hovering at around 2.4. PCE is hovering at around 2.1. Unemployment not quite high enough yet to cut anything. So we're just at this rock or hard place where there's just not enough reasons from the Fed's perspective, based on the data, to do much of anything, I don't think. So we're talking about no cut potentially until June or until something breaks. That's where we're at the moment. Trueflation just continues to cut lows here, 1.42. And it looks good, looks great. Really nothing else to say here. For trueflation, the last mile has been achieved. We have gotten below 2% for CPI. That clearly has not happened yet. This month's CPI 15 days in, still basically unchanged from last month. PCE is yet to come in yet for last month, but that's at a healthy spot. Core PCE slightly, still a little too hot. So, you know, is this good enough for the Fed? I don't know. The hawks are going to say not enough yet. We need 3 to 6 months of 2% prints or lower to do anything. Okay, you know, then if that's the case, we are not there yet, certainly. GDP is still deeply in negative territory. Not much has changed there. Even the gold adjusted number deeply in negative territory, at least according to the Atlanta Fed. The New York Fed still has us at 2.5, 2.6%. We'll see who ends up being right and what sort of political shenanigans we get around an officially declared NBER recession, which won't happen probably until January 2026 because it's backward looking. So we still need 2 consecutive negative GDP prints first for the NBER to say anything. But a lot of these financial thought leaders are already calling for recessionary conditions in the current environment. Reverse repo continues to drain. We're going to be refilling the TGA today with tax dollars. We have been refilling the TGA with tax dollars. So that is negative for liquidity. Reverse repo basically flat here at around 100 billion. All of the beginning of quarter refill has basically, for the most part, been drained back to pre-April levels. So really not much of anything to say there. If we look at BTC against global liquidity in the green, US liquidity in the blue, we are seeing a divergence here. BTC is going in the opposite direction. It isn't always or ever has it been directly connected with liquidity. But if I had to choose and I had to say, okay, am I bullish or bearish based on the current liquidity conditions? The current liquidity conditions should eventually be bullish for risk assets. Ultimately, though, US liquidity has gone nowhere since 2022. Although the Fed is probably not cutting next meeting, what they probably will end up doing is ending QT completely, moving it from 5 billion to zero. That's not QE, but it's a path to QE eventually. But that's going to take some time. It's going to take another month. It's probably going to take something into Q4. Definitely got to be patient and sit tight for the moment. Now, you'd think based on my perfect crypto angry happy schematic that crypto would be exploding higher. Has not. We firmly broke below any 100 support, any 101 support. Dollar very much in bearish territory, and BTC hasn't really cared yet. Things might just be too volatile all over the place globally with bonds for BTC to catch a bid yet. Maybe gold is too bullish still, but eventually this should matter. It should matter that the dollar has continued to sell off significantly. It always has mattered. I don't think there's a reason to suggest why it won't matter going forward. Oil still trying to price in global recession, breaking multi-year lows there. Did have a bit of a spinning top dragonfly last week, but until they start refilling the US SPR or something happens with OPEC or whatever, growth expectations change. I doubt oil starts to pick up again. And it's been in bearish neutral territory since 2022. So really nothing to speak of on that chart, and that's good for energy and inflation prices, obviously. 10-year yield has been all over the place, straight down, straight up, back in the middle. Many have called for Fed intervention. There have been some issues with the basis trade deleveraging, potentially foreign sellers, although that's harder to really pin down. Seeing dollar down, equities down, bonds down does probably suggest US capital flight. But high time frame, 10-year yield still pretty directionless. And if we look at the ETF bond complex here, TLT still, there's nothing to do here. What do you do here? Technicals flat, down, negative. At least IEF is neutral. It's held its level. Ag, fairly neutral, just flat there. SHI, the 1 to 3 year bond ETF, leaning increasingly bullish, but really not much to do on the others. And this is probably as good as you're going to get in legacy land, unless you're trading Palantir at a 2000 PE multiple. The trend metrics, at least for SHI, are leaning significantly more bullish than the rest of the group. And for the SPY, not in bullish territory. Okay, next chart. That's just kind of how it is. There's really nothing to do here until we're back above the cloud again. The last 4 times we had bullish TK cross price above cloud, we were good to go. Now this may be over. This whole paradigm may be over if global capital doesn't want to be in the US anymore, but we'll see. Technicals aren't there, so why bother? Really nothing to do there, and nothing to do broadly across the board. Q's the same, just in no man's land here. Probably need 1 to 2 months before we get an answer there. If we look at TQQQ, same story. Like, what do you do here? There's nothing to do. This is the 4 hours. This would probably be the lowest time frame I'd want to do anything in that. Probably won't be until May. So let this just chop around. Maybe you get an Adam and Eve. Maybe you get another insane dip. I don't know. I just don't think there's anything to do whatsoever. Certainly not in bull territory. Mag 7 as a group all look horrific. Microsoft, oddly enough, maybe looks the best. Early signs of an inverted head and shoulders there, but this is very much in absolute no man's land. Once again, the cloud is trying to keep you out of trouble. You had the bearish DK cross here. Basically, at the bottom, it didn't go anywhere. No bearish continuation, but then it told you to get back in here. told you to get out all the way up here, February, and it saves you from this. Saves you from all this pain. So we're not there yet. Needs 2-3 months probably before things start to look better. So it's going to be a few more macro Mondays of nothingness going forward. Even the defensive stuff, XLU, super volatile. At least it's back into the range. Doesn't look great, but it looks better than tech and consumer discretionary and even energy. Energy on that oil chart, XLE here, doesn't look great. So there's really nothing. I mean, I scanned a bunch of charts. It's probably better to pull up a equity scanner and see what actually looks good here. I'm guessing that the gold stuff still looks okay, but as far as entries are concerned, I think the best you're going to get is still SHY. I really don't see anything else yet that looks as good from an entry perspective. On that uplifting note, that's all for this one. Give me a like, dislike, comment, share, subscribe. Happy trading.